tonight's webinar. We're excited to have Roberta Hudy, and I always say that right. I said it Hudy right, correct, Roberta?
You got it correct.
I knew it. Double check, Well, savvy investors using self-directed IRAs. So very timely topic. We're super excited about it. There is so much opportunity right now. I always love the quote, by the Oracle Warren Buffett, right? Be greedy when everybody's fearful, and fearful when everybody's greedy, right? So great time to be in the market. And if you're not doing it with qualified funds, self-directed accounts, recover some money, finding out ways to do that, you definitely should be. Absolutely. So great topic for tonight. We're super excited to have Roberta with us. And I'll get into introducing Roberta here in just a minute. I wanted to go through a few quick introductions before we get started. So here's a list of our webinars we've done recently. We have a lot more coming up. If obviously everybody's staying at home, hope everybody's safe and well and just taking care of themselves and their families. It's been a weird time, but like Roberta and I were talking before, there's a lot of silver lining to it. And so hopefully you're taking time to get educated and learn some things maybe you didn't have time to do before. We've got a few different webinars coming up. So, Don will be teaching one next week. So Don Pendleton, my partner, will be teaching protecting your real estate investments for asset protection purposes. That's a great one. Don't miss that. Scott Estel on the CARES Act tax strategies. And we'll have some of that tonight with you, Roberta. Great topic. Aaron Adams, investing in real estate in today's market. That's a big one. What are the opportunities? There are some opportunities for sure. Don't miss that. And then Randy Skeen, he is he's got thousands and thousands of hours of court experience, litigation attorney. He's going to be a part of the team a little bit here with us and kind of shed some light on the other side. So if you are being sued, what the attorneys do, what to watch out for. That will be a very interesting one from a real trial attorney with thousands of hours of court experience. Pretty amazing stuff. See how your LLC can be tested. Pretty amazing. So what we teach in a nutshell on how that's the other side of protecting what you have. So we're excited about that. And as always, guys, we've really missed having the 3-day asset protection summit. We've really, really missed having, our events face-to-face. I like Zoom meetings and GoToWebinar meetings, but I'm kind of getting a little bit of cabin fever. So if you are itching to get out and you have not been to one of our 3-day asset protection summits, we strongly encourage you to attend. We have a great lineup. Roberta, you've been to ours a few times. Would you say we pack it full of education?
You pack it full of education. And you even go into the evenings, we all get used to it, so it's wonderful. It's a lot. It's great.
Thank you. Well, we've been accused of providing a little too much information sometimes, if you will, on the nuts and bolts of setting up your LLC. And we like to err on the side of caution. If you have an LLC or corporation and you're not doing it right, well, you need to know how and why. So the Asset Protection Summit's a great place to meet. We like to say it's a lifetime to accumulate and 3 days to protect. And when you have a powerhouse of asset protection attorneys, tax attorneys, financial advisors, planners, real estate investors, stock investors, all in one room, it's crazy not to come. So we strongly encourage you to come. Here's our dates coming up. Anaheim was supposed to be June 1st, 2nd, and 3rd. That's no longer. We've actually moved that to February of next year. You probably all know why. And that's obviously because, COVID-19 will not allow us to do that event. So the next one is Phoenix, July 27th through 29th. And because of class size limitations with the state, there are limitations on that. So if you have any interest in coming, I suggest you register very soon because that one will most likely be overfilled. So please come. Orlando, September. We hope we're open and good to go there. If you want to take a look at our agenda, you can see there we've got a lot of information protectwealth.com. Take a look. Happy to have you guys. We're also still promoting our asset protection cruise. If any of you, a lot of those of you who have the cabin fever still want to come on a cruise. I'm impressed, guys. So we've had a lot ask about that. As of right now, we are still planning on the cruise for December. Hopefully everything's good by then. We've got really, really good rates. They get better and better. So if you haven't done a cruise to the Eastern Caribbean, now is your chance, and you have 3 days on board. In fact, Roberta, you know, Jill's actually done a cruise with us before. It was kind of fun to have. Yeah, it was fun. She came probably 4 or 5 years ago.
Yes.
It's fun. You're kind of stuck on the cruise ship for, you know, 7 days. And hey, you know what? If you want to spend time with the attorneys, there's no better chance. They're not going anywhere. So it's a great place to come and learn. So we'd love to have you. All right, so a legal disclaimer. Yeah, thanks. It's great to get out of the.
We'll see. You never know.
Yeah.
We'll surprise you.
Hey, come on down. Come on down. We'd love to have you. And of course, we are an asset protection company, so therefore we always give a legal disclaimer, and basically it says there is no earnings claims, and of course we're not giving you legal, financial, or tax advice specifically for you, right? It is something that we suggest you seek out professionals for your individual circumstances. And Roberta, this brings us to you. Thank you so much for joining us tonight. We're so super excited to have Roberta Hudy with us tonight. And I'll tell you, so I had the opportunity and pleasure of spending some time with Roberta at a few of our different events. I have been super impressed because Roberta, your knowledge is awesome. You've been, and I'll let you get, you know, more detail on your history here a little bit with the self-directed IRAs and different things, but you have a super insightful knowledge and your grasp of, you know, I think it's a fairly complicated topic, for sure. And so your grasp of making it simple has been impressive, and anybody who's had time to spend with you always comes out super happy because you make the complicated seem simple. So we love that. Thank you. So what I'm going to do, yeah, we appreciate it. What I'm going to do is I'm going to turn the time over to you. I'm going to switch the screen to you, and then I'll go ahead and put myself on mute, and we'll turn it over to you. So it should be coming your way here in just a moment. And then if you have any questions or need anything, I'll be here in the background ready to go. And we are planning on doing Q&A, you know, questions at the end, correct?
We are. My apology. Let me get that screen where it needs to be here, folks.
You're fine. So do you want to leave questions till the end?
Yes, we are. We are going to cover questions. And I'm going to make this pretty lively, conversational, and feel free to, of course, use the chat box for questions. But yes, at the end, we're going to open this up and spend quite a bit of time there. So that'll be great.
Great. All right. Okay. Thanks, Roberta.
Thank you. So thank you, Kendall, and thank you everyone for being here this evening. I'm very excited to do a virtual event here with Protect Wealth. Again, I love to always be invited, and it's a pleasure to work with Don and Kendall specifically, and the whole team. So again, thanks for joining us. And I am Roberta Hudy with iPlan Group, and we are based in Westlake, Ohio, which is just outside of Cleveland, Ohio. And we are a self-directed IRA administrator, and we have the custodial responsibility for those of you that are using retirement dollars for investing in alternative investments. And of course, the housekeeping is always very important. As Kendall has already mentioned, we are simply here for educational purposes only. It's very important that you know that we don't give you any tax, legal, or investment advice. It's very important that you do your due diligence all the way through to the third parties and related into with any investment. And again, we are here simply to give you the tools, the resources, and the support to use self-directed IRAs. We're regulated by the Department of Labor as well as the IRS. So it's very important that we remain passive, but our passion in education is very big, and we love to educate you and make sure that we are listening to your individual needs as an investor. So we look forward to definitely talking with each and every one of you if you have the interest in moving forward, of course, with self-directed IRAs. What we're going to cover tonight is a little bit about iPlan Group. Some of you I certainly have met face-to-face or even on the phone, but we'll cover just some basics about us, a little bit about self-directed IRA basics as well, even if this is the third or fourth time you've heard about it, but maybe you have not done self-directed IRA investing. It always helps to kind of go over those basics. And we're going to kind of trickle that in along with some real estate IRA investment case study stories. So we're going to focus mainly on the real estate in the IRA tonight. There's other things you can do, precious metals and all different types of creative investing, but we're going to focus on real estate. And of course, again, focus on your questions. So please be jotting those down as we go through and make sure that we can address those towards the end of this presentation. It's going to take about 30 minutes probably to cover. But just be sure that you make notes to ask the questions. As I mentioned, we are a self-directed IRA administrator, and our passion here at iPlan Group is really to empower you, the self-directed IRA investor, to grow tax-advantaged wealth in alternative investments. We also are a provider of self-directed IRA education, and of course we're doing a lot more virtually. Definitely check out our company pages on Facebook and LinkedIn. We are definitely putting a lot more on there as things have been changing in our environment, moving from live events and certainly doing more to access our information online. Of course, iplangroup.com is another place to look at that as well. What makes iPlan Group different? This is really important to note, especially those of you that are currently using a self-directed IRA custodian and administrator. iPlan Group is developed and has been built by investors for investors. Jill Banner, our founder and CEO, is probably one of the smartest, most accomplished real estate investors, and she has done an amazing job with iPlan Group. But especially in her own investments. So it was through her experience and frustrations that she decided to start iPlan Group. We also offer same-day processing. So we're a boutique firm. You are not going to get caught in a phone queue or in a process of going from one department to the other. We do same-day processing, so that is critical. We do not charge extra for that. And because we are a little bit smaller and we have the mindset of investor, I should say an investor mindset internally, we give you a more personal client experience, and we're able to address your questions specifically more quickly, and again, in a much more personal way. We have a simplified fee structure, also very key. We're not going to go into that too much tonight. Just want you to know that it is a flat fee. It's capped. It is not based on a percentage of your asset or account value. We don't have any hidden fees, so no transaction fees, very simplified, and happy to go into that in more detail with you one-on-one. Again, let's clarify, just self-directed, kind of a basic here. Self-directed is just really an industry term or a marketing term. A lot of times you'll hear a self-directed IRA. It's not a specialty account. It just means that you hold your IRA account or a portion of it, those funds, with a company like an iPlan Group that allows you to direct your money, your retirement dollars, into alternative investments. In regard to those contribution limits and distribution rules, they're virtually the same as an IRA that you would hold right now. So same tax benefits, same rules, if you will. It's just that you hold that money with a company like iPlan Group. So why are we seeing self-directed IRA investors increasing? I know we're seeing it increase, and I bet you are too, especially if you are networking quite a bit with other investors like yourself that are like-minded. They are growing in the self-directed IRA space. This industry is growing. I still think we're kind of at the, maybe not infancy, but we definitely have a long way to go in getting this message out. But people are definitely using them because of the diversification that a self-directed IRA allows you. It also gives you the ability to invest in what you know, what you're comfortable with. Maybe your financial advisor says, oh, no, you can't do real estate in an IRA. It's not that you can't do it or it's not permissible. It certainly is. It's allowed by the IRS, and it's part of the structure of an IRA for you to direct into those funds. They just don't do it. So we give you that ability to invest in what you really know and what you're comfortable with to get better returns. And you can grow these assets tax deferred or tax-free. The Roth IRA, we'll touch on that tonight. You really do have the ability to grow funds in a tax-free bucket, I like to call it. It's very powerful and it's unlimited. So you can actually do things, investments outside of the stock market, and not deal with those ups and downs with a portion of your funds in a self-directed IRA. So it's a very popular alternative. Self-directed IRA investments, there's a lot of permissible investments out there. Very few things really that you can't do. But we find our clients are divided pretty equally in these categories. We've got about a third of our clients doing real estate, which we're really going to touch on tonight, whether that's the physical, in this case, it's the physical property, the rentals, the rehabs, the wholesaling that is possible in an IRA. We've got about a third of our clients that are doing note investing, private lending. So create a promissory note, mortgage backed. Some of these promissory notes can be secured or unsecured, but you certainly can do those in an IRA. And then we have about a third of our clients that are investing into entities. So an LLC, very popular topic at Protect Wealth. And there's a lot of strategies to using an entity, but you can invest retirement dollars into those entities. There's some things to know about those entities and how they're structured, and if you can use your own funds. But we have a lot of people that are doing that, and they're also investing in startup companies and even crowdfunding. So very creative ways to invest in these tax advantaged environments. So we'll get into one of our most exciting stories in different ways, and I really love this story about Larry. He is an investor here in Ohio and an iPlan Group client, and his story is particularly exciting because it's really kind of like a comeback story, and that's why I like it probably the most. But he retired actually after a long career working for Ford, Motor Company, and he was in the operations area as an employee there. And when he retired, yes, he retired, the pension that he had, originally those shares inside of that pension were at $75 value per share, and they went down to $3 when he retired. So Larry was a very optimistic guy and still is. And he said, okay, I guess I'm going back to work. So he did. And he worked for Johnson Controls and was able to start another 401k and grow that particular 401k as well. Now, he grew it, but then 2008 hit and he lost again. So he had over about $200,000 in that account and it went down to $60,000. So Larry was pretty frustrated, but he said, you know what, I'm a take control kind of guy. And he had certainly seen people do real estate investing and heard about iPlan Group and self-directed IRAs. And he said to himself, if I can run the operations for a Ford plant or a Johnson Controls, I certainly can do a little bit of real estate. So he came over to iPlan Group and he was able to roll over those former 401ks. So he had these two accounts, not at the value that he wanted, of course, but he was able to roll those over into a traditional IRA and self-direct that into and I'm just looking at some notes here. Okay, I think we're still good on audio. So he was able to direct the funds into real estate. He purchased approximately 14 properties over 16 years. Those were buy and hold. He did some lease options as well. And he was investing in real estate, by the way, for the first time. So he was able to grow that account to nearly over $1 million. So it started at $360,000 to over $1 million in just 6 years. Now, this is while he was taking required minimum distributions that a traditional IRA, now formally that was at 70.5, that you take that required minimum distribution. Now from the Secure Act, it is 72 that the required minimum distribution kicks in. But Larry was taking those distributions and growing this account at the same time. He was able to remain retired, also care for his wife who was ill, and give her in-home care, which is a story in and of itself. But here's what's really exciting. The properties that he holds in the IRA, now he has about, I believe it's 7 properties to date. When he sells those properties, he bought them under market, right? So he's going to be able to profit maybe 30 to 40% when he sells the properties at market value. So it's incredible. This account is going to continue to grow. So great example of a self-directed IRA investor who understands the concepts and actually executes those concepts. Now this slide I like to show because it's really important as we move through these stories. You start maybe thinking of some potential investments and you're thinking, okay, this sounds good, or I've heard about this, I'm ready, I need to do this, but I'm waiting to find the right investment. You really cannot start investing with self-directed IRA funds until you have the account opened and funded. And that's because the titling of the investment has to be correct upfront. So that's from the time of the offer. Even if you're putting down earnest money, even if that's $100, it's got to be titled correctly. And we, of course, walk through that process with our clients and explain exactly how to do that. We have a lot of information on our website as well that explains this, but very important to keep in mind. Once you make an offer, we can't back that property into an IRA. It has to be titled properly upfront. And that's true even if your IRA has just a portion of the investment, 10% or 20% of the investment, and you're partnering it with other money or other accounts. So very important to keep in mind. Basically 3 ways to fund a self-directed IRA. One is a contribution. So depending on the account type, now with a Roth and a traditional IRA, you are limited to that annual contribution for 2019 and 2020 of $6,000 annually. And for those that are age 50 and over, $7,000. So you get that $1,000 catch-up contribution. So $6,000 or $7,000. Other accounts have other contribution limits, and that's a great way to fund. And by the way, they're very powerful if you do those on a consistent basis. You can grow accounts significantly just by making those committed contributions. You can also transfer your funds from an existing IRA. So that was a great example. Well, actually, we're going to see more of that moving forward. In Larry's example, it was a rollover, that employer-sponsored plan. But a transfer is a great way to do it too. So traditional to traditional is what we call an in-kind transfer, or Roth to Roth. So those are non-taxable events, and a great way, if you've got some IRA funds sitting in an account, you can of course fund at a much higher amount if you've got those accounts currently in your name. And then the third way is to roll over a former 401k. Prior to getting on our recording here, we were chatting a little bit about this earlier. With the current situation in the economy and the CARES Act, there's been some interesting provisions to access IRA funds for those of you that need to access those funds. But also with the current layoffs and things that we've been seeing, a lot of 401ks are becoming available. So maybe you have investors, or maybe you have a job that you have lost, or you're laid off. Those 401ks are available immediately to roll those over into a traditional IRA. So that includes those sponsored plans for those of you that have TSP or pensions, 403Bs, whatever it is in your case. And if you have a small business plan as well, that's available for you to roll over and fund a traditional IRA. So those are the basic ways to fund an IRA, 3 ways. The self-directed IRA accounts that can be partnered are the ones that you see right here on the screen. So we're going to touch on traditional and Roth. You can also use a health savings account, a very powerful account. by the way, because the contribution is tax deductible, so tax deductible going in, and then when you pay for a qualified medical expense, of course, that's a tax-free withdrawal, so you're really getting the best of both worlds. And we're going to touch on this Coverdell Education Savings Account, or CISA account that it's referred as. And this is a great account for those of you that have children, nieces, nephews, grandchildren. All you need here is a Social Security number basically for the child, and then they can become investors by using these Coverdell Education Savings Account funds. We're going to touch on that in the next story. And also small business plans, of course, can be self-directed. Solo 401ks for the owner-operated business and their spouse and/or partners. So definitely reach out to us individually if you want to talk about those particular accounts and if you qualify. Now, in this example, we've got a really interesting story behind this, and it's basically a story of finding a mobile home park. It was originally through an auction environment, so a lot of due diligence involved here. And there were also mineral rights on the property, which is actually real estate, by the way. The mineral rights are in the real estate. And this is an example of the investor who used the Coverdell Education Savings Accounts, or CISA accounts, with her children. So she found, again, at an auction that this mobile home park was going up, and of course, did a little due diligence undercover and found out there was actually 15 more lots than what was initially listed in the auction. So she knew it was really a great opportunity. And she was able to purchase the mobile home park, and this was in 2014, for $140,000. Now, she used her children's CISA accounts that she had already established, and the CISA accounts owned 10%, so 5% in each child's account, titled in the CISA IRA. Lo and behold, mineral rights were on the property, and she was able to lease those mineral rights for 8 months later for $115,000. So now these accounts are growing at a considerable rate, not just because of the purchase price, but because of this income coming into the IRAs. The park was sold in 2018 for $20,000, so nice profit. But because the mineral rights are in the real estate entitled in the IRA, the CISAs, this portion, she was able to keep those mineral rights and finance, of course, another creative strategy for the investor. She was able to finance the mobile home park for the new owner, but then lease those mineral rights again in 2019, again for $115,000. At this point, the Coverdell Education Savings Accounts were over double in value than when she started with the original amount, and it was approximately $7,000 per account, CISA account, that went into that investment. Now there's nearly just over $21,000 in each CISA, and now those funds are available to pay for qualified educational expenses, and in this case it was college. Now, one child may or may not be using all those college funds, but that's okay, because those funds can be used also for vocational school. It can also be transferred to another child, which is also great in this situation. And the funds can also be used for private school, books, uniforms. There's a lot of different things involved. So that particular account, by the way, contribution limit there is $2,000 per child. A lot of people start these when their children are young and they're able to contribute. And over time, especially if you have more than one child, it's a lot of buying power just to make those contributions for the children and get those ready for investing. So very powerful. That was really a 32% return for those CISA accounts. Another great example, and this is going to give us more of the concepts or the mechanics of how a self-directed IRA can be opened and funded and how it can be used. This is Tony. This is somebody that I know pretty well. I've worked with him. He's a a business coach actually, and does a really great job with coaching and writing books and doing a lot of exciting things. And he was one of those people also that was very curious about real estate. We have mutual friends that are doing real estate, and he had heard of iPlan Group, and he was like, well, I think real estate is something that I really need to seriously look at. And he decided to go ahead and get into a self-directed IRA because he heard of the profit that he could make in a tax-advantaged way, especially a Roth IRA. But he had a SEP, so a simplified employee pension plan, as a small business owner and a consultant. So he said, you know, I want to take this account and I'm going to roll it into a traditional IRA and fund it, but I really want to get into Roth dollars. Of course, his financial advisor was completely against this, and Tony was very persistent, and he said, I understand you're not in favor of this, and you're thinking that this isn't possible, but I absolutely know that I can do it. So once he moved those funds over, he was able to do the Roth conversion. Now, a Roth conversion is a great way to get into a Roth account if you make too much money, because we have some modified adjusted gross income limits that are involved on a Roth IRA. If you make too much money, you can't contribute to a Roth. So a lot of people think that you can't open a Roth IRA. However, if you've got those 401k funds or you've got some traditional funds, you can convert the funds into Roth. It is a taxable event. We can talk more about that one-on-one. But in this case, it made a lot of sense. So he did the Roth conversion, and then he made his first investment into a single family home. And of course, the titling, again, has to be correct up front. So he was ready to go. And he titled, this was, by the way, an outright 100% owned by the IRA. And it was titled iPlan Group Agent for Custodian, Tony's Roth IRA, or you can use the account number here, by the way. If you're concerned about privacy, you're able to do that as well. And what Tony did, just by buying an under market property, he doubled basically the value of his Roth IRA in just 3 months. Before moving those funds to iPlan Group, those funds were not growing at all because the, of course, fees on the account were in place, and it just wasn't a very dynamic portfolio. So now he is building tax-free wealth in that Roth IRA. He can deploy these funds over and over and over. So we look forward to hearing more about this story and how he starts to build that rental income and deploys those dollars over and over. Tax advantage choices, that's really what we're talking about when we talk about self-directed IRAs. In a live audience, a lot of times I'll get feedback here. When do you want to pay taxes? And most people say never, but really it's about when. Do you want to pay taxes on the seed when you have a little bit of money, or do you want to pay it on the growth when you've grown your money in an IRA? Which one would you rather pay, right? If your tax rate, net effective tax rate, stayed exactly the same, and of course tax rates generally don't stay the same, but even if they did, at the time of retirement or when you grow these accounts, you would be paying a lot more in tax if you have a lot more money in the account when you take that money out at distribution. So it's really about when you want to pay those taxes. Just real quickly, to give you an example, some of you may have seen this before, but I think it gives a great visual to drive home the point of paying those taxes on growth. This investment, just for an example, let's say you buy a house in a traditional IRA, and it's titled again in the IRA, not your name personally up front. And in this case, you just buy the house in Cleveland, Ohio. By the way, this is very possible to buy a house for $98,000. In some states, not so much. But you purchase the home for $98,000 titled in the IRA, just happen to buy it right, you resell it for $198,000. $100,000 is the profit on that investment. At age 59 and a half, when you're eligible to take that money out without penalty, who's involved? The IRS, right? That silent partner. Now, let's say you do the exact same investment, but you do it with a Roth IRA, so Roth dollars. Exact same example. You profit $100,000 in this investment. At 59 and a half, when you're eligible to take that money out without penalty, who's gone? The IRS. you will never pay tax on that $100,000 growth that you just made. This is what we call the tax-free bucket. And this is the one that, again, self-directed IRAs are not the silver bullet. By no means do we say do every investment moving forward in a Roth IRA. If you could, I guess it might be a good thing, right? But it's definitely a tool that you want to add to the toolkit. You want to look at liquidity, you want to look at deferred benefits as well as that deferred bucket, tax deferred, and you certainly want to build a tax-free bucket. It's important to know at the time of retirement, what exactly is your net effective tax rate going to be? That's a very important thing to consider with your advisors and tax professionals because that number at retirement may surprise you, and that tax-free bucket could be extremely valuable. So that Roth IRA in Tony's example, again, very powerful because he knows he's building that bucket, and it kind of puts it on autopilot in a lot of ways to be able to go to that ATM, the Roth IRA at retirement. I do want to mention here as well in the CARES Act, we do have a great article and some good information on our website. You can certainly reach out to us at the end of this presentation. I can send you that document as well. There are some changes with the current legislation, CARES Act, and you are able to access some of those funds without penalty. You don't have to wait till 59 and a half. It's just good to know, and of course discuss your individual situation in regard to that. So we have one more story. I think we're doing pretty well on time. Hopefully everybody is jotting down some questions, and I look forward to addressing those. This one is a great one. I always love how when I'm doing a presentation and kind of refining it, I had someone call me today and say, hey, I'm going to be doing some tax lien purchases in Florida. This individual did not live in the state of Florida, but he's on the hunt for those tax liens, and he's going to be doing an online auction coming up, and said, hey, can you do a Roth IRA for us? So of course that answer is yes. And this is another great example of a single mom who really does a lot with a little bit. A lot of people tell me, self-directed IRAs sound great, but I don't have a lot of money. Don't think it's really something for me at this point. But if you are in real estate and of course at the Protect Wealth events, you're learning a lot of great strategies. And tax liens are definitely something a topic that's talked about and discussed. And in this case, it's with an IRA, so traditional IRA, and basically grows about 400% in just 6 years. The single mom has $3,000 in a traditional IRA, lives in Washington State, but is familiar with Broward County, Florida. And over-the-counter tax liens, by the way, this is one of the reasons a lot of investors are interested in tax liens, are those returns, about 18%. Of course, the due diligence was kind of fun in this case as well, because she was able to travel to Florida to take her son to Disney, and of course that's a tax-deductible trip or expense to visit this property and do the due diligence. So she was able to purchase 2 tax liens. One was with the IRA and the other was cash. So she did 2 in this case. Again, adding that tool to the toolkit, right? 18% on a return on both, annual percentage rate there. And in 22 months, she was able to receive that 18%, and that the other, of course, was 27. Now, she grew that IRA and was able to purchase later the tax deed, okay, with this account. Allow that property to go into foreclosure, and then after 3 years received $12,327 into that account. So again, a powerful growth, 400%. So if this is a muscle that you can exercise in that investment toolkit, I call it, very powerful. You cannot see these returns typically, and I shouldn't say that because of course I'm not advising you, right? But I just want to say typically we're not seeing those kinds of returns in the traditional investing portfolios, if you will. So very powerful. Very few things you cannot do with an IRA in terms of investing. So collectibles is one of those things. I'm going to mention a few others. You cannot direct your IRA funds into life insurance, S corporations, alcoholic beverages, so you can't collect those things, but you can do things like farmland, wholesale land. We've touched on the mineral rights, which is very interesting to look at. There's some interesting characteristics that you can benefit from in regards to taxation. Something, again, we can talk about one-on-one, but very few things that you can't do. We have actually an investor story that involves some pigs. So as long as you're not eating the bacon and feeding the pigs, you're good. You can definitely invest with your IRA. There are some prohibited persons to keep in mind. A lot of people know about that, but definitely ask me if you have a potential investment, who that prohibited person might be. In some cases, that is you. We can talk about that. So why use an IRA? We've definitely touched on a lot of these things already. Certainly that investment flexibility, the comfort really of investing in what you know and just doing it in a tax advantaged way. An IRA in and of itself is a trust. So there's some asset protection in and of itself. A lot of people don't know that. Cannot be attached in a bankruptcy, and avoid probate. That's also a big benefit. Also being familiar with self-directed IRAs, just this conversation, the fact that you're here and you're familiar, especially when you're raising private money or talking to potential investors or trying to come up with funds yourself, you can certainly partner accounts, and just like we had in that example in the mobile home park, you can partner multiple accounts with family members. You can find capital resources in 401ks, revitalize those funds and use them to give you the buying power. And of course, those tax deferred contributions are powerful. Solo 401ks, if you qualify for those as a business owner, age 50 and over, you can get tax deferred contributions in excess of, well, I should say up to about $62,000. So again, very powerful. Just want to mention before we get into our question and answers, we do have an upcoming event on property taxes. So I wanted to let you know about that. This is hosted by iPlan Group, but you can reach out to Protect Wealth. I'll have a link on the next page that you can certainly ask questions and consult with us, and I can reach out to you and give you the details. But please join us. It is a free seminar, and it's on how do I do a property tax valuation and tax assessment. It's some great principles for you. And for those of you that have property in an IRA, this can be super powerful as well. Definitely a way to increase value. So definitely want to make sure that I invite you to that. Again, that's June 2nd, and that'll be at noon Eastern time. So this evening, hopefully you've got some questions ready to roll. On this screen here, you can see the link, protectwealth.com, and with iPlan there at the end. And you can reach out if you are in the process of starting a self-directed IRA. Maybe I've talked to you already. Well, good thing is you're here today, so we are waiving that application fee for you. Again, I mentioned very simplified, a one-time application fee of just $50 in most cases. And we are waiving that, and schedule your session with us so we can talk about your specific needs as an investor. So I think we can open it up, Kendall, if you're ready.
Always ready. I love it. Thank you so much, Roberta. That was tremendous. You know, this is so underutilized. You know, obviously, you know, people on our call here, a lot of you know that, man, this is probably the most smart thing you can do with your money, is to not pay taxes on the growth of your investments. And self-directed is a great way to go. Love it, love it. Thank you so much, Roberta. Really do appreciate you being here tonight.
You're welcome.
So let's go ahead and jump into some questions. I will say a lot of the questions we get are kind of geared towards, I was told I couldn't, you know, and I find this kind of funny. And you know this too, Roberta, we get this all the time. Everyone says, I can't do it, I can't do it, I was told I can't do it. And it's funny because, you know, maybe you're with Vanguard or, you know, the different TD Ameritrades, different companies out there, and they, you know, okay, you can't invest in real estate. Yeah, probably with TD Ameritrade, yeah, you probably can't, right? Or Vanguard, you probably can't. That's true. This is where a self-directed company like yourself, like iPlan, comes in, and yes, you can, right? Anything to add on that?
Yeah, so that's, I mean, it's a great point that you brought that up. A lot of people do say that, and it's not that you can't do it, it's just that the TD Ameritrade companies like the Wells Fargo, the Charles Schwab, they just don't do it. It's actually very clunky as a custodial responsibility to administer real estate investments, because we have to do what's called a compliance review. And so we accumulate all that paperwork that's involved in your self-directed IRA investment. So even in a promissory note, if it's mortgage backed, we need to see the mortgage agreement, right? We need to see all those papers, including that promissory note. And we collect all that, review it, make sure that it is feasible for you as an investor. So it's clunky. It's not like a ETF, right? Some people do, by the way, traditional investing with a self-directed IRA, so stocks and bonds. We do have a way, we have a pretty seamless platform with TD Ameritrade, but one of the reasons they're not recommending it for you is because they just don't do it. We do it, and we can facilitate all of that for you. So just keep in mind, I mean, if you go to the irs.gov website and you research real estate in an IRA and what you can and cannot do, you absolutely can do it. They just don't talk about it because they don't do it.
Yeah, they have mutual funds that they want to put you into, and that's what they can do. So they say you can't do it. Well, that doesn't mean you can't. You just are at the wrong place to do it. So you got to go to the right place to get things done. I love it.
Exactly.
Thank you so much. Thank you so much. All right, Joyce, let's jump in some of these questions. Joyce asked, I've heard a caution with self-directed IRAs, that is, if you do not handle things precisely correctly, it could trigger an unwanted taxable event. So what potential situations could cause this, and how do you avoid them?
So that's an interesting question. That could be related to a couple of things. That could be related to unrelated debt finance income, UDFI or UBIT, unrelated business income tax. So the purpose of an IRA is to grow those dollars for retirement, right? Just like a nonprofit, they're designed to do nonprofit work. But let's say they're going to sell some t-shirts. Now that's an unrelated business activity, and that could trigger taxation for that organization. So the same thing applies in an IRA, and there are some things that could trigger taxation, including leveraged debt. So an IRA can take a loan as well as give a loan. So if an IRA takes on a loan, then that could trigger some taxation. That could be what Joyce is referring to, and of course that's a very individual conversation. A lot of things can come into play. There are some tax deductions to keep in mind, different calculations involved. CPAs are also familiar with this as well. And the other thing that can trigger taxation, quite honestly, is if you're moving funds from a traditional account and you do a transfer and you put it into a Roth. I've heard these stories before, and depending on who you're working with, they may or may not explain that that's a taxable event when you put those traditional funds into a Roth. So I've seen that as well, and all of a sudden they're getting a tax bill at the end of the year that they do that particular rollover. And that can be a little upsetting if you didn't plan on the tax bill. So yes, there are some things that can trigger taxation.
Yeah, and it's funny because we get this a lot from a lot of financial advisors saying, oh, self-directed IRAs, they're so risky, don't do it, don't do it. Well, that's probably because you're considering doing a self-directed account, which means pulling the money away from them, hence commissions away from them, right? That's just the honest truth. It really is. So the hard. Yeah, it could be. So, and so we find that happens a lot. They're really scaring you to not doing it. But the problem is, yep, you just need to go with someone like iPlan again, who can actually, the part that Roberta, iPlan, Jill, what they do is they are custodians again. So they'll make it very clear of what you can and cannot do to avoid those pitfalls, right, Roberta?
Absolutely, absolutely. And that's why we like to cover everything with you. Yep.
Yeah, it's good to have a good partner because you can do a lot more than you think, but within reason. Myself and my partner, we have SEP IRAs, and it's fantastic. They're self-directed. The good thing about it is, Joyce, you do want them to be hands-off. They're supposed to be hands-off. It's nice. Passive rental real estate, it's a good thing. I don't want to be hands-on. So it's actually been very nice. So
yes. We do that paperwork, and again, there's no transaction fees for that, and same-day processing as well. So the access to the funds is much quicker. So if you have to pay an expense related to your investment, so if it's a rental property, you have some kind of repair, that we take care of all of that for you. So we do a lot of that heavy lifting for sure. Absolutely.
Wow.
And I did want to comment.
Nice. I didn't know that.
Yeah, definitely. And again, you make a good point too. There are some investments in real estate. A lot of you out there are very experienced. You know what a passive investment means to you. But really a self-directed IRA investment is truly an investor mindset. It does move you away from doing that sweat equity, because that's one of the things you can't do, is work on the property that you hold or have interest in certain levels, I should say, depending on how you direct the investment or direct the funds. But it eliminates that sweat equity. It moves you away and empowers you to really invest over and over, get on to the next transaction. I talk to a lot of investors that do some very creative things. Syndications is one of them as well. Apartment syndications or multifamily. They're able to get into that space because they're using self-directed IRA funds. They're letting somebody else run with it because they are great in that investment model. So they're able to just really kind of put it on autopilot. So there is a lot that is feasible.
Wow. Okay. All right, Jack, can you explain the difference between a 529 and a CISA IRA?
Great question. So a 529 plan is really a state plan. It's not an IRA, and there's some great benefits to that. The CISA account is what we would call a traditional. It's in that traditional IRA category. It does not have a tax deductible contribution, that $2,000 annual limit, but what it allows you to do, again, is self-direct. So you can take those funds and direct it into real estate, the categories that we've talked about tonight, and grow those accounts on behalf of the child. So all of a sudden you can have a newborn or a 1-year-old or 5-year-old technically investing in real estate. And then they have a tax-free withdrawal when you pay for a qualified education expense. So again, great way to grow those accounts for the child. And of course, you can put those into a Roth account at a later date. We didn't talk about the qualifications for a Roth, but if you have children that have W-2 or earned income, they can certainly open a Roth, and there's a lot of reasons to go with the Roth.
Great. Okay, and that brings up another question. So we have a lot of people asking kind of like, okay, I can contribute $6,000 or $7,000. Okay, that may be true for a Roth or traditional, but you can go, what is it, 55,000, 56,000 for a SEP? You can get up over 100,000 in certain types of accounts. So you're not limited to just that. Depends on the type of account, right?
Correct. So a lot of people do ask, can I have multiple accounts? And the answer is yes. You're just limited to the contribution limits on those individual accounts. Now, if you have multiple, let's say traditional IRAs or multiple Roths, you're still limited to that annual contribution for the individual. So that doesn't change. However, most investors that are using self-directed IRAs in a very powerful way are not overly concerned with that. They're more concerned with the creative strategies in using the IRAs to invest in real estate and to get them into the tax-deferred or tax-free environment. But you definitely can have multiple accounts. You're just limited to the contribution limits specific to those accounts. Small business plans are very powerful. Again, that's a one-on-one conversation because you have to have earned income on the solo. There's different strategies around using those accounts. So we help people walk through that. But again, for 2020, for those of you that are age 50 and over, that's up to $62,000. And that's because you're the employer in that plan, and you're also the employee. So you're making that match, right? As opposed to the employer that you would be working for in a W-2 situation. And part of that account, on the employee side, you can put Roth on that. So it can have both traditional funds and Roth funds. Again, very attractive.
Yeah, so if you think, okay, $6,000 or $7,000 a year doesn't get you excited, you potentially can put a lot more away depending on how you do it. So make sure and talk to iPlan about that.
Absolutely. And of course, in our example of tax liens, you can do a lot with a little. So don't be too shy.
Yeah. That's true. That's true. All right. So a lot of questions coming in about the kind of the elephant in the room then. So Roberta, you're waiving fees and have significantly reduced fees. And that is true. We've compared providers out there. That is true. So how are you guys compensated? What's annual fee? Are there flat monthly fees? How does that work?
So good question. Our fees, again, are simplified. So the application fee is $50 for a traditional and the Roth. The HSA and the CISA accounts are actually $25 application fees. Solo 401ks are a different category. Again, we talk about that one-on-one. But just one-time application fee. We get those accounts established rather quickly, about 24 to 48 hours on the traditional and Roth. And other accounts outside of the solo 401k. And then we do an annual administration fee that's based on the asset value in the account. Another reason the property tax question is an interesting one too, but it's based on asset value or account value. So that could be cash or assets. And the accounts, I should say the annual fee starts at $225 a year. And then again, just goes up from there. It is capped. It's not a percentage of the account. So for those of you that are with other custodians or you are in high dollar, $500,000, $1 million type scenarios, you will never pay more than $1,000 annually at iPlan Group. That's a big difference from the competition there. And I would say most of our clients are in that $375 to $500 annual fee, which is just shy of $200,000.
Wow. Yeah, a lot less expensive than other providers out there. No doubt about it.
Yes.
Thank you. All right. Deidre is asking, compares tax strategy. So self-directed IRA with a penalty-free distribution of a retirement account with the CARES Act. Is there that may be an individual, because there are some restrictions with the CARES Act. That's you might want to talk to them individually about that, Deidre.
Yeah, so great question. I don't mind the question. It definitely is an individual discussion. The CARES Act is definitely giving some wonderful provisions for people that have an IRA, so the account holder, to access those funds without penalty, absolutely. So that is an individual decision, again, for savvy investors, people that are growing tax-deferred or tax-free funds, aren't really looking at that short-term window. They're looking at that long-term, right? To keep those funds in the IRA, to grow those funds in a powerful way. So at retirement, they've got that tax-free bucket or that tax-deferred growth. So they really don't want to access those funds. Again, we don't advise. I do hear from clients that if they're not needing to live on those funds or to save a home or a piece of real estate, they tend to keep things even. So you got to look at your needs for that liquidity and that deferred bucket, if you will, tax deferred, and then the tax free. But please reach out. We can definitely talk about that.
Great. All right. Okay, so out of state real estate, so somewhere where you don't live, how does that affect the Roth or traditional IRA for buying real estate out of state?
So not sure in what aspect, if they are referring to a direction of investment or an authorization and getting funds to the table out of state, same day processing. We do have ACH and wire of funds, cashier's checks, all kinds of things. We find that our clients out of state certainly don't need expedited services per se, because we are pretty much expedited every day. So that's a good thing. But in terms of maybe crossing state lines with self-directed IRA funds, if that's what we're referring to, no issues at all. In that example that you saw with the tax lien purchase, resident of Washington and invested in Florida. So not restricted there. I will say, doing your due diligence and being very familiar with the laws in your state, super important. So again, at iPlan Group, we always say, run with the winners. Definitely work with those professionals that are succeeding in the investment type that you're interested in, and understand, be comfortable. This is important that you're comfortable with the investment and doing that due diligence. So I could comment in different ways, but I think that may or may not.
Saying lives in California, wants to purchase in Washington, how does that affect taxes? And frankly, if it's a retirement account, it really shouldn't.
That's correct. There are no capital gains either inside of an IRA. Once you title real estate or an asset in an IRA, it's subject to the rules or regulations set by the IRS specific to that account. But let's say you sell that property and it's now outside of the IRA, it's outside of the IRA. So, but no capital gains, avoids probate, and so the tax question, you're good to go. We have people that invest all over. It really is, and it's great because you can, again, invest where you're comfortable, and that's important. If you understand a better community, a community that you don't live in, or maybe you have a relative or investors that in another county or another state, you can do that with your funds. More than welcome.
It's huge, 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 huge. You're not going to pay taxes on it. And this goes to your question, Jack. It's, he's asking what happens to depreciation in a Roth for real estate. You don't got to worry about it, right, Roberta? That's the beauty of it.
Yeah, I think in some cases people think that's beautiful, and other people, again, depending on your specific investment or your specific business structure, there's benefits and depreciation, right? Especially if it's accelerated or you're doing any kind of cost segregation, or you're in commercial space, like you want to analyze all of that. Keep in mind that self-directed IRAs are not the silver bullet. They are a tool. They are something that you want to add to that investor toolkit, so you can start building potentially those tax-free Roth dollars. So it's not going to be necessarily for everything that you do. So the analysis of depreciation needs to be done specific to you. But that's right, depreciation inside of the IRA, it's not really significant, right? Because there is no depreciation. But there may be something specific in your investment strategy where that's powerful. So I can't speak to that, but
sure. Qualified funds versus non-qualified funds, right?
Exactly.
If you have retirement accounts and they're all in your qualified funds, IRAs, don't worry about it. We got that's a tax strategy in itself. If they're outside of the qualified funds, that's a different ball game. You've got to worry about depreciation. Let's talk about that. That's a whole different ball game. But inside, you're good to go. It's kind of nice.
Yeah.
Again, individual.
It's much more simple. Yes.
It's nice. It's beautiful, beautiful for asset protection, for tax planning. It's just easy. I love it. So if you can get the money in, do it. All right. Okay, Josh asked, he just found out about early withdrawals from his TSP. So he's interested. Can he just contact you guys directly about that?
Yes. Right on the screen, you should be able to see that right now, the Protect Wealth link there. And if you go,
and there's a link.
Oh, I'm sorry. I goofed.
No, there's a live link available for you. You're fine. Nope. If you look on your chat screen, everybody, you should have a live link that's clickable. You can actually click on it. It'll take you right there, fill it out, and Roberta and her team will get back to you.
Yeah, it's protectwealth.com. And then it's
iPlan. Yep.
You got it, iPlan. And I hit a button, so I'm not sure if you're seeing me or if you're seeing the screen. Nope, I don't know what's going on.
Yeah, it looks good. You look good. You're good. Okay, all right, a few more questions. Are you still okay to take a few more questions, Roberta?
Absolutely, sure.
All right, let's jump in. We got a few more. Can I form an LLC with my self-directed IRA?
So another great question. You can have an IRA own an LLC, so an IRA owned LLC. So instead of the IRA being in your name, it's in the name of the LLC. And some people do this because they want to access funds, or they're doing a different strategy with an LLC and the IRA owns it, and then that way the IRA is able to fund the LLC. Now there are some rules around that, so that's something that we definitely want to talk about one-on-one and things to watch out for, but you can do that, and if the IRA owns the LLC, you need to set that up at the same time. And it's not a have to, but it's something that is definitely done for different reasons. And some of that's for people that are doing a lot of auction type environments, and I'm sorry, acquiring real estate through auction. You can certainly do a cashier's check and wire funds. Again, same day processing. We help clients all the time in that space that are not doing the LLC, but you can certainly set that up, and we can help with that as well.
One thing a lot of you guys, I notice, Roberta keeps mentioning how fast they wire funds. If any of you have been with a company before, this is critical. And I know one of the main reasons that Jill started our plan group was because she was so fed up, because she's a real estate investor, and a lot of you are, with the speed with which a lot of these companies work was not cutting it, and she lost deals that way. So she started iPlan Group, and I'm telling you, that's a big benefit with iPlan. They're quick, they're fast, easy. So really nice to work with iPlan that way. It's a big deal.
It's a very big deal, and I'm glad you mentioned that, because time is money, and again, for savvy investors, timing is everything. You know, people know how to assess a deal. You've been doing this for a long time. I hear this a lot from people that are in auction environments, tax liens. I also hear it with wholesalers. You know, that takes expertise. And there's a lot of people that are great at it. And then if you're doing it with a self-directed IRA and you miss a deal, that can be a significant loss. So again, we have that mindset internally, absolutely. So we get it done. That's for sure.
This is where iPlan is ninja. This is where they come in, they shine for sure.
Oh, that's great. That's great.
All right, Sharon, can you roll over a 401k half and half, so half and half, into two different Roths? For example, a stock brokerage account and a real estate account.
So I believe the question is, you have 401k funds, that's what I heard, and you want to take a portion and put it into a traditional IRA, or no, two Roths. Two Roths.
Yep.
Yeah, that's possible to have two separate accounts. We'd have to do the conversion. So we would bring the money over into a single account. By the way, there wouldn't be an annual fee. It's really a pass-through account. And then we would set up two separate Roth accounts, but that is possible. Absolutely.
So there's basically no limit. I mean, of course, you probably have different structures and fees for different accounts, but there's really no limit. I mean, you can't just have one IRA. You can have 50. You can have really as many as you want, right, Roberta?
You can. We have clients that have multiple accounts for a lot of different reasons, and I would say that investor families, real estate families that understand these concepts, they'll partner their IRAs in accounts, or they'll set them up for their children and grandchildren. It goes on and on and on. So yes, absolutely, you can have multiple accounts. On those Roth conversions, you know, when you're using the 401k funds, again, taxable events, so we want to talk about that. You do not have to convert all the funds at one time. It can be done in part. So you just have to remember the amount that you convert is going to be added to your net ordinary income in the tax year that you make the conversion. So if you make $100,000 in 2020, you convert $50,000 of traditional money to Roth. Now your net effective tax rate is $150,000. Now, for some people, your income maybe this past year, for whatever reason, is lower. So it's a great year to do conversion. So you want to make sure that you're consulting with your tax advisor. You look at the whole picture because it is a taxable event when you convert.
Yeah, play that game for sure. Sometimes it's okay to have a lower income when you want to have a lower income. Yeah, there's reasons behind that too. That's a strategy, guys.
You don't always have to brag, you know.
Yeah, absolutely. All right. So Jack asked, once I get money into a self-directed IRA, can I still invest in the stock market? And if so, what platform?
Yes, so at iPlan Group, we have, as I mentioned earlier, a pretty seamless platform with TD Ameritrade. So we have a lot of clients that open a self-directed IRA, and at the same time, we provide a TD Ameritrade application with an account number that would be associated with your IRA at iPlan Group. And then you're able to direct those funds to the TD Ameritrade platform. Of course, they can help you on that end. We have some people that are very familiar, used to doing directing trades, and they're able to do options, whatever it is, but now they're just using the self-directed IRA funds. So we talk about this at the Protect Wealth events because Mike and Stacy also do some great training on stocks, right? The coaching of stock trading. And if you have an account with iPlan Group, you can certainly direct the funds and use their strategy as well with that account. So that's how it works with us. Little limited, but not, because the TD Ameritrade platform is pretty flexible. If you have a platform in mind, certainly run that by us and we can see if we can work with it. But that's the one we work with now.
Yeah, it's just easier, but I mean, people can you can do currencies, you can do options. I mean, there's a lot of different apps out there. I know,
Yep.
Obviously, Roberta, you have a lot of different accounts, different providers out there you work with. You're pretty flexible, so it's kind of nice, but definitely talk to you guys to make it seamless.
Yes.
Okay. All right. Do you partner with registered investment advisors or solo practitioners for the clients that want to diversify out of equities or fixed income? If so, is there any breaks or referral fees? You guys work with different people, registered investment advisor?
So glad to hear that question, because earlier when we were saying, how the financial advisors aren't in favor of it, or they, kind of say you can't do it. I wanted to mention that, yes, we work with financial advisors. We do have some institutional relationships with family offices as well. It's really great to see financial advisors that understand, right? They care about the client and they also understand the experience level of their client. And they are more than willing to work with the client and say, hey, let's talk about this particular concept and doing the self-directed portion with your funds. And we work with the advisors. In some cases, we never talk to the client. So that's something we can definitely talk about one-on-one and just put together what works best for you and your clients. But we absolutely encourage those relationships. And we think it's super smart because I think it's going to benefit financial advisors that are educated in this space and supporting their clients in doing it, as opposed to frustrating clients and maybe even losing them altogether. So yeah, I love the question. So please definitely reach out.
Yeah. Okay, Erwin, we may have covered this a little bit already, but from a tax perspective, if you own the property in an IRA, sell the property, and leave the entire property sale amount in the IRA, would this trigger a capital gains tax with ordinary taxes when the money is withdrawn from the IRA?
No, no capital gains. Nope,
yep.
No capital gains. If that's a Roth IRA, if that's a Roth IRA, at the time of distribution, no tax, no penalty. Right now, there's no penalty. Mm-hmm.
That's the beauty of it. Yeah, very powerful. All right. What are the steps? Yeah, this is why you do it. Absolutely. Okay. What are the steps to take to minimize taxes while converting an IRA to a Roth IRA? Good question.
So Kendall, repeat that.
So how do you minimize taxes when converting an IRA, maybe a traditional IRA, to a Roth IRA?
Mm-hmm. Well, that goes back to the earlier comment discussion on consulting with your tax advisor, because the timing of that is critical. Of course, there's been an extension too on the filing of 2019 taxes. So we're looking at July 15th versus the April 15th. So if you haven't filed, there's a way to, look at that opportunity as well, and making contributions and conversions for those tax years. So it's definitely something that has more to do with looking at your income, because that's going to be, it's kind of out of, our hands when you do a conversion. It's just going to be subject to your net effective tax rate that you have in the tax filing year and the year that you do the conversion. So
Yeah,
that's a roundabout way of saying it's really about bringing down that income.
yeah. And it's complex. It's on your individual situation, but you know what? People do this all the time, guys. And honestly, it makes a lot of sense, even with penalties and taxes. Sometimes conversion can actually make sense a lot of times, especially if the investment you've made 4 or 5% in your other account over the years, and you want to switch to some passive real estate and make 15, 10, 15, 20. Well, geez, you'll catch that up in a year or two. Doesn't matter. So you got to
Right.
look at the whole picture.
Yes,
Yeah. All right.
absolutely.
Okay, now some account-specific questions. Is there a minimum dollar value in IRA that iPlan will accept for opening an account?
No minimum. So yeah, you just have to think about the fees. A lot of people get an account opened and funded with a small amount because they just want to be in that place of readiness, right, to deploy those funds for an offer. But we have no minimums.
Cool. That's huge. All right.
Mhm.
Are we, so are they, so Joyce is asking, are they completely on their own after the account is set up, or does iPlan provide further guidance, advisement with the fee, or what does the fee include?
Another really good question. So the fee includes all those services. So any, again, those expense payments related to the investment, contributions, there's certain tax forms that we would assist with. Again, we can talk more about that one-on-one, but there's that compliance and security that our clients have because you're holding your funds with a company that's regulated by the IRS and the Department of Labor. So we're keeping those funds safe. They're insured, and we're also taking care of all that bookkeeping, really. It's really the investment activity is what we're doing. And there's no fees, involved with that. It's just a flat annual fee.
And here's the cool part, guys, that I like about iPlan is they are investors, like Roberta said. It's created
Right.
by investors for investors, and that's huge because they've been there. They invest in real estate. They invest in a lot of different things. I know specifically, absolutely. So they know what to do. I mean, obviously, they can't give you specific investment advice, but I'm telling you, if you have questions about your investments and things like that, and you want to know best practices, they know because they've done it. So that's kind of cool to have that backing you up.
Definitely. I almost kind of got hung up on the question there for a second, but I wanted to add, we absolutely have this personal client experience. So not only just all of that, transaction and investment support, right, to get the investments done, but yes, we help clients every day. We have people that call. You can reach out to me and our investment team. If you have a potential investment, but you need to vet that investment, we do that for our clients all the time. If you need specific, you feel like the issue is going to take a little bit longer, you can schedule strategy sessions directly on our website as well. And just list your questions there. We'll set a time, time aside for you to make sure that we're answering your questions. So we are there as a support in education and resources, and we're increasing that, especially with the change in the virtual environment. We were doing a lot of live events, especially locally. We would do that on a regular basis, and we're shifting all of that. So the education is available to our clients, but our clients specifically, we really help with compliance review. So that's critical.
Okay, all right, we've got a few questions left here. Wrapping up, guys. Thanks so much for your questions. Good ones tonight. Just a few more. Krishna asks, we don't have to take RMDs this year. Is this a good year for conversion to a Roth?
It could be. Another great tax question for that CPA, but yeah, you're not increasing that taxable income. So great point. This could be a wonderful year.
Yeah, could be. All right, so questions specifically about what's allowed and what's not allowed. Are collectibles allowed?
No, collectibles are not. And one example would be cars. So let's say you're collecting antique cars. You can't hold those in your IRA. But let's say you're running, I want to say, maybe selling them, like reselling them. That's something that could be considered, but not like your personal collectible. Let me give a better example. If you're in construction, I don't know if capital equipment might be one of those collectibles, but we do have people that will actually purchase capital equipment in an IRA, and then they're able to lease that out, right? And return the money back to the IRA. It's not like a collectible. So I'm not sure what collectible you're referring to, but in general, no. The art, the antiques, that kind of thing, absolutely not.
Unless you're collecting real estate.
Unless you're collecting real estate, and that's a great collectible.
That's the best collectible.
On that one, yes.
That's the best kind. I like it. Okay. How about purchase of surplus companies or manufacturer companies?
Purchasing companies. That's something we'd have to talk about one-on-one. So the answer would be yes. You can invest in an entity, and the buying and selling of a company is a little bit different. So we definitely would have to talk about that.
Great. Okay. And can you trade options inside of an IRA?
You can. You can.
Okay.
Again, at iPlan Group, that seamless platform is TD, but yep, you can do it with self-directed funds.
I love it. All right. Last question here, Krishna. And I think we covered it, but I think this is a one-on-one. Can you invest in startup companies? Is that advisable? I think that's kind of a one-on-one question, right?
No, you absolutely can, and I think it's a great question. We've done some educational events with startup companies, with different professionals that can speak to that. We've got some more being queued up, so definitely stay tuned for that. But yes, startup companies, absolutely. Again, due diligence, huge. Understanding the stage that startup is in and making sure that you're comfortable with that. Risk-free investments really don't exist, at least to my knowledge, but if you're comfortable and that's something you want to invest in, absolutely. We have investors doing that all the time. Peter Thiel happens to be one of those people that does that as well, co-founder of PayPal. So he has a Roth in the million as we speak. So he did that in startup companies.
That's impressive. Well, and Richard just threw this question in here last. I like it. It's a great question. Can you purchase property with a down payment from an IRA and then finance the rest? And maybe that's a great way to partner, right?
You can. You can definitely do that. You need a non-recourse lender. That's, again, something if you reach out, I can help you with that to kind of understand that concept. And we have resources to help with on that. Again, not advising, but you certainly can do that. You can put a down payment on, then your IRA is going to be taking a loan. You can get the conventional financing, or it can be financed out of the IRA, so that happens as well. But you just need to be aware, again, of any kind of taxation that might be triggered with the leveraged debt. But it's definitely possible, but non-recourse. So the only recourse on that loan would be the property itself, not the IRA.
See, this is why you want to partner with somebody, a company that knows this kind of thing. Non-recourse loans are awesome. That's a great way to go. Roberta, thank you so much for your time. You know, you can. I think it's pretty easy to see why iPlan's a great group to work with. We sure enjoy working with them. Roberta, we certainly appreciate your time tonight. Is there anything you want to add before we close?
I just want to say thank you. This has been a great experience, and thank you. It's wonderful to be a part of the event, and I didn't have to get on a plane. I'm still speaking a little later at night here in Northeast Ohio, but it's been fabulous, and I really appreciate everyone being here and the questions. It's been great, and I really look forward to touching base and talking with individuals. Please do reach out. We want to share more information with you, and hope to see you next time. So thank you.
Thank you so much, Roberta. We certainly appreciate you being with us tonight as well. Everybody, great questions. I love it. You all are very savvy investors. We appreciate that. That's always nice to hear. Again, if you're interested in learning more and spending more time and getting your application fees waived, which is really generous of iPlan to do that for us tonight, make sure I just put in the chat screen again, protectwealth.com/iPlan. Click on that link. Fill out the form. That's a really nice, generous hookup. Thank you so much, Roberta.
You're very welcome. It's been great. Thank you.
All right, guys, thanks so much for coming tonight. Everybody, we look forward to seeing you again on the webinar. Check your emails. Please call us if you have any questions. We'll see you again in the future. Stay safe.
All right, sounds great. Good night.